Good morning, everybody. You can find your seats. It's a pleasure to welcome you all here. It's the middle of an Arctic morning here in New York. My name is Will Ingers. I'm the president of the board here at the Brazilian American Chamber of Commerce. And on behalf of the whole board, I want to welcome all of you here for this very important discussion on Brazil economic and political outlook. Obviously, it's going to be a very exciting year in Brazil with elections coming up. Brazil is getting some headlines also here from the United States, so I'm interested to see the view from the panel. But first of all, I want to thank Henry and his team here for welcoming us here to this beautiful place. King Spalding, you guys moved here last year? Couple months. Beautiful space. We're gonna be back if we're welcome. So thank you so much. Henry, a long-term board member here. So thanks so much. Also thanks to Safra National Bank for being one of our sponsors here. And I want to pass the word to Henry to welcome you as well. Thank you.
Thanks, Will. We're lucky to have you as president and like Frank Sinatra, chairman of the board. Welcome everybody to King Spalding. It's an honor to host this event for you all. We have a decades-long relationship with the chamber. I've been on the board for many years. They've kept me, even though I've effectively moved to Miami. But it's a great pleasure. So I wanted to, my partner Russell Sachs and myself want to extend an invitation to all of you to participate. And Russell's been a great help in organizing this and kind of carrying the torch after I.
Good morning. Thank you, Henry, for your introduction and for hosting us today. In Brazil, the most important event in 2026 will be the October elections. Until then, markets will remain in a holding pattern. Discouraged when polls show Lula ahead, more upbeat when they do not. Beneath these swings in sentiment, however, the underlying picture remains one of persistent mediocrity. And the episode of Banco Master is another indication of widespread corruption in business, in the political class, and ruling elites. From a macroeconomic standpoint, the medium term is not favorable. We all recognize that a fiscal cliff awaits the next president. Even the administration's budget for 2026 admits as much, while still proposing a 9% spending increase. In the meantime, inflation this year is likely to be somewhat lower, as is growth. That mix should allow the central bank to start an easing cycle, as signaled in yesterday's COFOM meeting. With a softer dollar, carry trades should help support the currency, reinforcing the disinflationary trend.
Brazil, the macro outlook. We just published the macroeconomic outlook for Latin America, which of course includes Brazil, at the beginning of January. And the title is telling. And the title is 2025, is that you again? That means that there are some elements of continuity, of some similarity between the macro backdrop, both domestically and external, to what we experienced during the second half of 2025. Starting with the external backdrop, we have resilient growth, about 2.8%. Our view is that we're going to see overperformance of the US economy, China and Europe. We also expect some mild depreciation of the dollar. Oil prices relatively contained, which is good to keep fuel inflation down, and it's good for the inflation outlook. We also expect to see more rate relief, so basically the Fed and other central banks cutting interest rates throughout the year. And for those that depend on copper and gold, that's really a bit of a commodities nirvana. In terms of trade, will remain very well supported. So in a certain sense, that is the scenario we had at the second half. Now, moving to Brazil, last year was a year of growth, slightly above 2%. We don't know yet the number for the fourth quarter. That's going to be a number between 2.2 to 2.3. Inflation at 4.3, not 2%, not the target, but within the target band. Very resilient labor market, where the unemployment rate is below the neutral rate of the NAIRU. The fiscal remaining the issue, the key macro fundamental that is the rates, something that is really like a soft macro fundamental, and I'm sure we'll discuss in more detail the fiscal picture.
Fiscal authorities don't have all that much leeway. Brazil has mostly non-discretionary earmarked expenditure, and they tried to get rid of that years ago, and it helped. We had some pretty good fiscal outcomes, but it's sort of gone away the other way. So let me take a look at the condition. I know Lisa will talk about this as well. Great to see old friends, by the way. Brazil is in an area of strict insolvency. That is, if we think about, they can't grow out of this, because the relationship is if the nominal deficit is bigger than the debt to GDP ratio times nominal GDP growth, they're insolvent. And we're just sort of assuming things stay like this forever, which they can't. Because they have so much non-discretionary expenditure, it creates a big problem, because especially in the Social Security sector, anything that Brazil does in fiscal to improve it has to be done by reform. It can't be done by purely fiscal fiat. So the main thing here, I would say, into the future, again, is Social Security. And it's hard to believe that, but yes, even after we've had these reforms, the reforms that we had starting in the Temer administration and then in the followed through past in the Bolsonaro administrations stopped the deterioration of the Social Security accounts. Brazil is still at its demographic peak. There's absolutely no reason to have any deficits. I mean, even other countries that have similar demographics, like Ecuador and so forth, have had primary surpluses throughout this. And the United States had them until just a couple months ago. So if you have a primary deficit, it's gotten a little better and it's more stable than it was before. It's now running, if we add the RPPS to RGPS, it's about 3.5% of GDP. But that's not solvent. You can't have a solvent public sector if you have primary deficits. And that's the other concern I have. The administration talks about when they talk about deficit zero, they're talking about primary deficit. They're not even making a chunk of payments into their interest. They need a 2 or 3% of GDP surplus to really start weighing on on the debt to GDP data. The net debt, which we don't really follow anymore, is about 65% of GDP and climbing, but more slowly. And the gross debt reached 79% in November. And it's just been upward going. And I don't see, as Alberto and Paulo said, certainly not an election year we're going to get this type of reform. But after this year, the new administration is going to have to do something. How can we predict we're going to have a fiscal crisis? Well, that's really hard. It's sort of like bankruptcy. You're going bankrupt slowly and then all of a sudden, right? And that's what happened with Dilma. It was the same combination of policies. It's hard to say when the markets will lose confidence, because that's going to be it. Everything else, what Alberto said, is absolutely right. The market is not losing confidence yet. You have fundamentals pushing dollar real down, and fiscal deficits, where you have a credible fiscal policy, do the same thing. But I suspect in some point or another, we're going to run into something. And certainly when you have only maybe 12% of your budget that's discretionary, we can't leave this to the fiscal authorities. It's up to Congress to do some reforms, and it's up to an executive to bring those reforms back online.
If we're looking at Brazil's rating construct, I can go back the reverse of what my planned remarks said, just taking off with Brazil, putting in that comparative context. In its rating, our ratings approach, right, we're looking at institutional setting, the economy, external position, fiscal, monetary. The fiscal is the weakest, but the growth story is also the weakest. And if we're looking at the growth story, we give a kind of a penalty, kind of not necessarily the right word, but we hit their growth assessment for below average growth relative to peers. That's notwithstanding some growth over the last couple of years, and this has been a back and forth. As you saw some higher growth on the margin, Question, is this finally the fruit of some of the work of prior reforms under the Temer and the Bolsonaro administration on the micro side? Or is it more of a spend and tax or tax and spend approach, right? But I think Alberto's comments that, the minute you started growing at, the three-ish, you had the inflationary pressure. So I think that has weighed into our view of not taking away this qualitative assessment of below average growth. And you need a mix of you need this combination of fiscal reform of some manner, and I think it goes beyond Social Security and tackling long-standing budgetary rigidities, which also impinge, because I'm doing more work with local governments, and that totally impinges on local government accounts as well as the dynamism to growth. We need the two to come together, in my view, to kind of help lift ratings upward. The anchor is the external position, and some credibility in monetary policy. The institutional setting is sort of in the middle. But now putting it in the broader context, Brazil's rating is BB, stable. Despite volatility and uncertainty in the global climate, and that's what I want to make some comments on, if you look at our sovereign ratings over the past year, there were far more upgrades, twice as many as downgrades on a trailing 12-month basis. Ironically, right? And that's the point that I wanted to talk a little bit about, as well as the fact that you have an evenly balanced positive and negative outlook. Okay? And that's what people might think that's surprising, given all the noise we've had over the past year with policy initiatives on the trade and foreign policy front within the U.S.
Why Flávio Bolsonaro? Why Bolsonaro, even if he's in jail, still marks high points in the electoral polls, and there's not an alternative, there's not a third way that we can pick from that. And I truly believe that this is because nowadays Lula represents the image of those that reject Bolsonaro and these more right or extreme right ideas that are really strong in Brazil. And on the other hand, Bolsonaro represents the anti-Lula sentiment more than anyone else. So whoever Bolsonaro appoints as the candidate that we will support, himself, his family, Tarcísio, whoever, he will start and will capture this anti-Lula sentiment in a stronger way than anyone else. And I believe that this point was made clear yesterday when Kassab made an did an interview with the Folha de São Paulo. Kassab is a political leader, a center leader that is trying to present an alternative in this election to show the Brazilian population that there's more options besides these polarizations that we are living in the past decade, I would say. And he says, I won't criticize Lula. And why he won't criticize Lula? Because he knows that he's disputing the votes of the right wing, of the right part of the spectrum, and he will dispute with Flávio Bolsonaro. And this creates a problem for the right wing. And that's why makes Lula a favorite, because he, first of all, he's the incumbent. He has a lot of policy going on. The economy is somehow under control. It's not a disaster in the short term, as we already discussed here. The inflation is under control. We are in this expectation of the easing of the interest rates. There were few reforms that will make the difference in short terms as well of the livings of the Brazilian people that needs to choose between Lula and other alternatives. And Lula is the only alternative in the left part of this spectrum.
Thank you again so much. We talked a lot about all the challenges that Brazil is facing, and but one thing is very interesting. I mean, the Bovespa is rallying like crazy, right? I mean, the Bovespa is up 83% in the past 13 months in dollars. The premium to hold equities in its lowest level since mid 2020. PEs are highest level since September 2021. So, investors are coming, and flows by foreign investors to Brazil, they have been quite strong. I mean, in January alone, January has been the strongest month for inflows by foreigners into Brazilian equities in the past, and in more than 1 year. So even with all the challenges, even with tough election ahead of us or an uncertain election ahead of us, investors are coming to Brazil. I know a lot has to do, and maybe a lot has to do with investors rotating out of the U.S. and looking for alternatives in other markets, in emerging markets. So we are seeing flows to emerging markets in general very strong. And it's not only Brazil that is performing strongly in the region. I mean, our peers are also doing very well. So clearly, investors are looking for alternatives. And yeah, we have a big fiscal issue that needs to be addressed eventually, either by whoever wins elections, to be honest. But the economy is doing fine, right? I mean, we've been growing consistently for the past 5 years, and we are probably going to grow again this year. So if you add the growth that we've seen in the past 5 years plus what we are modeling for this year, Brazil will be growing accumulated 20% in 6 years, which is not amazing, but it's good, right? It's a 3% average growth per year, and unemployment rates are low. The current account deficit has gone up a lot because the economy is super heated, but it's being fully financed by foreign direct investments. So I don't think we are. The economy is not disorganized the way it was when Dilma was running the country. We are exhausting our resources, though. I mean, we are going to grow this year again, but we cannot grow at the same speed that we grew in past years. The growth has to decelerate because we don't have more people to work, and capacity is getting to a limit. So that's why I think rates are so high. We're having to bring growth back down below 2% to be sustainable.
The most over the past year at least is how to invest in elections. What's the elections trade? And my reaction has been the same and still is. There's one thing we know for sure. Nobody really knows who's going to win. It's very, very close to 50-50. Even if there is a favorite, it's very close to a coin toss. And this is unlikely to change until probably third quarter of this year. So we still probably have 6 months or so plus of this uncertainty. And we are getting paid almost 15% rate in Brazil. And the rotation with the dollar weakness will likely continue. So my answer has been, don't bet on an election, at least for now. So wait, get paid for it. Right away the rotation and benefit from all these global trends. But eventually, and I think this third quarter was, the dial will move, and we have to be prepared for that. So I'd like to focus this last round of questions on how to detect early signs that the pendulum is moving. And I think the move that concerns us is actually no move, it's more of the same. Everyone agrees here that it's unsustainable. So what we fear is that we stay on this unsustainable path. So I'd like to start with you, Alberto, and say, let's assume that it's more of the same or close to that. How do you see this unfolding? Is the economy growth that will take a hit? Is the currency? Is the balance of payments? How do you think this unfolds, and what could be the reaction?
It's highly binary and it's highly consequential. But I think the plot becomes more complex. Even if we knew for sure it's going to win the election, which we don't, it's not clear what that means. The variable that will reflect the most in the changing dynamics of the election, I think, will exchange rate is, the financial variable that is the mostly forward-looking is a very liquid market. So if you sense or see something that good or bad, the exchange rate is the first variable to move. After that, local rates, because there are particular low rates that have to be correlated with movements of the exchange rate. And then comes the economy and the labor market. And of course, the equity market is a blend of both the macro fundamentals, growth and employment and wages, and the discount factor rates, which depend on the condition.
I think the variable that will tell you immediately how the market sees the evolving with the economics will be the exchange rate.
Until then, enjoy the ride. Rates are at 15%, example real rates at 10%. That's a reflection of very high carry. Brazil is not offering very high carry because the story is great, because if the story was great, we would not be offering 15%. And also in an environment of a weaker dollar, and with the Fed eventually cutting rates, interest rate differential is so attractive that pays for all the secrecies of the lower story. But the point I want to make is, what happens if President Lula is reelected? What does that mean? I'm not a political scientist, but I'm trying to analyze from a macro standpoint. There are some that say that in his fourth mandate, with no re-election in sight, in his 80s, President Lula will pursue only socialist dreams. And therefore, if we implement the same policies of the spend and tax, that Joanne mentions, the macro is not going to take it. This is like the shortcut to a major economic and financial crisis.
Lisa, in your case, let's assume that's more of the same. Does it require a quick action from your side, or do you think that the more of the same warrants the benefit of the doubt? Maybe the deficit will reduce by taxing and spending maybe a little bit less, or it means that we are going on a slippery slope here and we have to act soon.
Thanks so much, Drauzio. Well, first, I'll always give the disclaimer, it's a group decision discussion, putting that out there. I think the path, as I suggested, for a stronger rating, higher rating, is a stronger fiscal story that includes outcomes. That could come from a mix of the growth and policy initiatives. I think it's hard to see meaningfully stronger fiscal outcomes without some kind of structural policy initiatives. So more of the same that keeps, to the degree that you can just be muddling along, you're not really improving anything. We have the debt continuing to decline. We have high deficits. Maybe they're coming down marginally, but we don't have anything, thinking of a real swing to a persistent primary surplus, etc. We don't have growth structurally really improving. These are I think those are the key things we'd be looking for. What policy initiatives would be forthcoming? But I think we'd also want to look at outcomes, right? You can suggest something, but at this point, unless it's, say there's a sense of some marginal improvement, I don't know that that's enough to have a committee change of view in terms of slightly better fiscal, etc. From that out there.
Adu, in your case, let's assume it's more the same here as well in the U.S., but no significant change in fiscal policies, more tax and spend, maybe less spend, but still the same idea. Can equities take that abuse? How do we see this unfolding, and what are the telltale signs that maybe it's moving to the left or not? Because also this Uncle Master in Rodeo is getting closer to the government, so there are many things. So what you're looking at to be more confident that the pen is swinging?
Yeah, so the first thing that we have some model to analyze the polls, and the polls indicate basically that Lula, in our case, has 80% of chance of winning. But because we aggregate everything, if you put like Tarcísio as his competitor, that drops to 60%. So it will be more near to the flip coin. But we don't believe in this moment that Tarcísio will be the candidate. We believe that Flávio will be the candidate representing the Bolsonaros. And when we run our models, analyzing rejections and Flávio performance and so on, the probability of Lula winning goes up to 90%. So that's why not knowing who will be in fact the candidate gives us this uncertainty that I would say that nobody knows. But I believe that the comments that Alberto did, they are perfect, because more important than know if Lula will win or not win is basically trying to analyze what happened next. And if, in our opinion, in our case, it's not given that Lula will be it's not totally given that he will be more leftist and least pragmatic, and it's not given that any other president will be more market friendly, just because they will need to, first of all, deal with the Congress. They need to be pragmatic. The political forces, they are unbalanced in this moment. The Congress has a lot of power. We're gonna have a more right-wing Congress in next election, that for sure. The big parties in Brazil, they are from Centrão or the center based or more right represented. So Lula will face an opposition, will face the same hard time that he faced in this moment. So he can, even if he wants to push more leftist policies and less pragmatic policies, he will still need to face the Congress and will have hard time to do that. We have the scenario in which, if there's a need for a big reform, there's always a possibility that the Congress bring to themselves this challenge and try to push the government to implement a reform. And if the government is weak, they will have more power to do that. Let's not forget that nowadays they control more or less 1/3 of the non-discretionary budget. So they need the budget to work, so they have the money to spend. They are also, we usually say that we face a more like right-wing Congress, but they are not right-wing that don't want to spend. They like to spend because they are addicted to the public finance that now is under control here in Brazil. And that will face some challenges to a president that is not Lula as well, because they will need to deal with this voracity of the political class that needs this public money to keep being powerful here in Brazil.
Unfortunately. It is 10:30 on this more hopeful note. I'd like to thank you all for your great presentations and you all for coming. Thank you.